What's up, everyone? It's Caddy with Money Vesting. So we've got a brand new instrument from CBOE that's going to be your Chicago Board of Options Exchange, and they are now giving us the volatility for one single day. So I'm going to break down exactly what this is, how to use it in your trading so you can actually keep track of real-time minute by minute volatility on the S&P 500 based on one single day, and basically kind of enhance your trading skills, and of course use it as you see fit. So hope you guys enjoyed this video and find it helpful. If you do, make sure that you drop a like. Don't forget to subscribe to the channel. If you're just joining us for the first time, link to our Discord and Patreon is going to be down below if you're interested in joining us, and of course getting access to all the buy and sell alerts, options alerts, trading ideas. Everything's going to be included, including private videos and live streams 3 days a week. And there's only 4 more days left for that 16% annual discount available with the link down below. So first things first, let's talk a little bit about the VIX, right? So VIX is the volatility index created by Chicago Board Options Exchange, or CBOE, in 1993, and it basically tracks the S&P 500 volatility over the next 30 days, right? So over the next 1 month, that's what it actually captures. Now, it is also known as the fear index or the investor sentiment index. When the volatility is low, it's time to go. When the VIX is high, it's time to buy, because they both move in opposite directions. Most of the times, right? 70 to 80% of the times, there's been a lot of back testing done between volatility and the S&P 500, and about 70 to 80% of the times when the VIX is higher or on the rise or going higher, the S&P 500 and the markets are generally selling off. So it is calculated using real-time prices of options on the S&P 500, both calls and puts, expiring every Friday of, every Friday, and then expiring on the third Friday of each month. And of course, we already went over the inverse relationship between volatility and S&P 500. Now, because of the rise in 0 days till expiration options on S&P 500, because there's been a lot of speculation, there's been a lot of interest and demand for 0 DTE options, that is 0 days till expiration. So buying literally at the open of market or trading day, and then closing those options out towards the end of the same trading day. So not holding them out overnight. Because of the demand and the S&P 500 trading volumes have increased for these particular type of options, the volatility is now starting to feel a little bit more outdated, because it's not as accurate as it used to be. For a couple of reasons. First of all, it is really just tracking the next 30 days worth of options activity in the S&P 500 as opposed to the next 1 day. So that's number one reason right there. And the second is it hasn't really been moving or reflecting the reality due to the increasing demand and the use of 0 days till expiration options on the S&P 500 by investors. So I'll go over just a chart which is quite interesting, and how the demand for these options has skyrocketed post-COVID, and we might be entering a new era of where this might be a more accurate and more sort of used indicator of market sentiment on a more daily basis. And of course, because of the high volume of 0 days till expiration options is distorting the reality, and with it, the volatility, the CBOE, pretty much the Chicago Board of Option Exchange, launched a new version of the VIX called CBOE 1-Day Volatility Index, and the ticker symbol is going to be VIX1D. So it's going to be VIX1D on your TradingView platform or on your TD Ameritrade or wherever it is that you're using, in order to capture the sentiment implicit in the 0 days till expiration option, since the VIX is a parameter of investor sentiment over the 1 month. In contrast, the 0 days till expiration options are measured in minutes and hours and not in days or weeks, hence the volatility index for 1 day. So VIX1D is going to be that actual resulting instrument. So this right here is what they created. So this is a whole PDF that you can go and check that out. So volatility index methodology, CBOE 1-Day Volatility Index, and it pretty much goes over how to calculate it. They've got a whole complex calculation over here, but what it's really doing is it's just taking into account the puts and the call options expiring on the very same day, and that's going to allow us to calculate the volatility on that one single day. Now, a few more things that I want to break down is this right here is the short-dated S&P 500 volume as a percentage of total volume. So short-dated meaning options contracts that are expiring in less than 24 hours or less than 1 day, right? So 0 DTE, 0 days till expiration. And what you'll notice is that this number was roughly around 20% of total S&P 500 volume, right? So pre-COVID, we were again at 20%. 1/5 of trading volume was with these short, dated options for S&P 500. And after COVID, in fact, as recently as the first quarter of 23, you can see this number spike above 45%, right? It's over 40%. That's a pretty significant amount of trading volume happening now with a 0-day sell expiration or very, very short dated options contract on the S&P 500. And usually the reason why people would like to trade these is because of economic data, FOMC meetings, earnings calls. We've got other economic data that's coming out. And really, that's going to have a much bigger impact on the market. So they want to have that hedge intraday, right, in order to protect themselves from further downside, or might even want to take some speculative bets to profit off of the volatility in the markets. This right here is the distribution. Again, you can see that we have seen a little bit over 1 month options contract. So again, distribution of S&P 500 volume by maturity. So options that are expiring in over 1 month has been coming down since 2011. So this is going back as far as 2011. You can see that at one point it made up over 60% of the trading volume and has now diminished down to only 20%. And then if you take a look at this dark blue, which is less than 24 hours, so again, very, very short dated options, 0 DTEs, at 2011, it was less than 10% and is now sitting at well over 40%. So you can start to kind of already see the interest or the demand for these short dated options, the 0 DTE options on the market. Now, this right here is going to be it. This is the volatility index for one single day. And right now you can see that I'm on my TradingView platform. VIX 1D is going to be the one to watch. And yesterday you can see that it was up 46% when the markets, the S&P 500 was down over 1.5%. So again, that inverse correlation, and the way you would use that is just by using the regular volatility, right, which is also higher today, 1.87%. And there's the inverse correlation, right? So when the VIX is going higher, the S&P is going lower, and you can actually start to see this from a more 5-minute, 1 minute, 30-minute time frame on an intraday basis to kind of draw conclusions and those correlations with the market with respect to other individual stocks as well to enhance your trading. Now, in the first trading day, which was Monday, April 24th, the VIX went up and the markets went up. So it's, again, going to take some time to kind of really establish that correlation there. But I think over time, we're going to continue to see that negative correlation. As you can see, literally yesterday when the VIX was on the rise here, the markets continued to sell off even up until like the last trading candle here. This right here, the markets did sell off and volatility did pull back a little bit. So we are seeing, again, that inverse correlation play out, and it's going to be quite interesting how this works in the months and days and weeks and years to come. So just wanted to present this. This is definitely going to be an additional tool in your arsenal to use if you are day trading, swing trading, options trading. Definitely something that you can utilize and to make better decisions. So hopefully this kind of helps you out a little bit. Make sure that you drop a like. Don't forget to subscribe to the channel. If you're just joining us for the first time, link to our Discord and Patreon is going to be down below. Let me know your thoughts down in the comment section below and how you plan to use this indicator moving forward in your trading. So again, 16% annual discount available till the end of this month. Link's going to be down below. As always, happy investing. I'll see you all in the next video.